Last month, I received a notification from my bank. It was my monthly interest payout on a savings account I have maintained for years. 3 cents. 3 pennies for the privilege of holding my money. Just 2 days later, that exact same bank sent me an aggressively cheerful email offering to lend me money for a personal loan at a 9% interest rate. That timing is not a coincidence. That is the entire business model. Right now, your bank is making a fortune off of you, and they aren't even doing it in a sneaky, hidden way. It is happening right out in the open, buried under the guise of convenience and tradition. This is what the financial industry internally refers to as the loyalty penalty. They are actively monetizing your inertia. The longer you leave your money parked in that familiar legacy checking account, the less they pay you. Let's look at the brutal math of their net interest margin. If you accidentally overdraw your checking account by just $10, they will not hesitate to hit you with a $35 overdraft fee before you can even open your app to check your balance. But if you give them $10,000 of your hard-earned cash and let it sit there for an entire year, they will reward you with exactly $1. Meanwhile, they turn around, take your $10,000, lend it out to someone else buying a car or funding a credit card, and they quietly pocket $900 in profit. You are taking 100% of the inflation risk, and they are taking 99% of the profit. But recently, I started tearing apart the fine print of an account that flips this entire dynamic on its head. It is entirely free to open. There are 0 monthly fees. There is no minimum balance required. And right now, it is automatically paying 3.26% on your cash every single day without you having to lift a finger or lock your money away. It is called the Fidelity Cash Management Account. And the deeper I dug into the mechanics of how this account operates, the more I realized it makes traditional banking look fundamentally obsolete. So let's completely redefine what a bank account should be. The Fidelity Cash Management Account, or CMA, is not actually a traditional bank account. Technically, it is a brokerage account, but it has been engineered to function exactly like a premium checking account in every single way that matters to your daily life. You get a debit card, you can write checks, you have a routing number and an account number. You can set up your employer's direct deposit, pay your credit card bills online, and deposit checks from your phone. But here's where the architecture of this account cuts the middleman out of your financial life. When you deposit money at a massive institution like Chase or Bank of America, they have to pay for thousands of physical brick-and-mortar branches with marble floors. Giant neon signs and thousands of tellers. You are paying for that real estate with your terrible interest rate. Fidelity doesn't have that massive retail banking overhead, so they can take that spread and hand it back to you. The secret engine behind this account is something called the sweep mechanism, a technology that used to be reserved exclusively for ultra-high net worth individuals and massive corporations to optimize their overnight cash flow. With the Fidelity CMA, the exact second your money hits the account, it doesn't just sit there dying against inflation. The system automatically sweeps your idle cash into a core position called SPYXX. SPYXX is Fidelity's government money market fund. As of right now, SPYXX is yielding roughly 3.26%. For context, the national average for a regular savings account is hovering around 0.4%, and the big legacy banks are paying a fraction of even that. That means this Fidelity account is paying over 8 times the national average on the exact same money with the exact same level of instant access. You don't have to manually transfer money between a checking and a savings account. The moment your paycheck lands, it instantly goes to work. Now, if you are a critical thinker, your alarm bells are probably ringing right now. You are likely asking the exact question you should be asking. If the yield is that high, is my money actually safe? Let's address the elephant in the room and expose exactly how banks use your money. When you put your money in a traditional bank for 0.01%, the bank takes your cash and often buys United States Treasury bills, earning 4 to 5% for themselves. They take the yield, you get the FDIC sticker on the door. With Fidelity's SPYXX fund, you are effectively doing the exact same thing, just without the bank skimming the profits. SPYXX holds U.S. Treasury bills and short-term government securities. You are indirectly lending to the federal government. Because SPYXX is an investment fund, it is not FDIC insured. That is the detail that usually terrifies people until they understand how the system actually works. Instead of FDIC, your account carries SIPC protection. The Securities Investor Protection Corporation is the brokerage world's equivalent of federal insurance. If Fidelity as an institution were to ever fail, SIPC steps in to protect your assets up to $500,000, including up to $250,000 specifically in cash. Furthermore, you have to look at history. Government money market funds hold the safest debt instruments on the planet, backed by the full taxing and borrowing power of the United States government. In the entire history of these specific types of government funds, not a single one has ever lost principal, not during the dot-com crash, and not during the 2008 financial crisis. Your money is not sitting on Fidelity's balance sheet, it is segregated. And there is a massive legal tax loophole hidden inside this structure that your bank will never offer you. Because SPXX generates its yield from U.S. government securities, a significant portion of the interest you earn may be entirely exempt from state and local income taxes. If you are a high earner living in a state with punishing tax rates like California, New York, or New Jersey, a traditional high-yield savings account is going to hit you with a tax bill that drags your real return down. SPXX legally shields a portion of that growth. But let's say you are an absolute traditionalist. Let's say the letters FDIC are a hard psychological requirement for you to sleep at night. Fidelity built a trapdoor just for you. Right inside the settings, you can flip a switch and change your core position to the FDIC Insured Deposit Sweep program. If you choose this, Fidelity takes your cash and automatically splits it across a network of partner banks, instantly securing you up to $4 million in FDIC insurance. The trade-off is the math. The yield drops to around 1.84%. It is still infinitely better than a legacy bank, and the choice of your exact risk tolerance remains entirely in your hands. Once you get past the safety mechanisms, you realize the yield is only the beginning. This account possesses 5 specific bank-killing features that dismantle the hidden costs of traditional finance. Feature number 1, the global ATM passport. If you like to travel, you know the pain of needing cash. You find yourself in a casino in Las Vegas at 2 in the morning, or at a convenience store in Tokyo, and the ATM flashes a warning that it will charge you a massive fee to access your own money. Most banks will hit you with an out-of-network charge and then let the ATM owner charge you again. With the Fidelity CMA All, ATM fees are reimbursed worldwide. Unlimited. If an ATM charges you $25, Fidelity silently refunds you $25. You will never hunt for an in-network ATM again. Feature number 2, 0% foreign transaction fees. The standard banking playbook is to quietly shave 1 to 3% off the top every single time you swipe your debit card outside of the United States. It is a hidden tax on your travels. Fidelity charges 0. You pay in the local currency and you keep every single cent of your purchasing power. Feature number 3, the standard of true 0. This is not a promotional gimmick where it's free for 6 months, and then they start bleeding you. There are no monthly maintenance fees. There are no minimum balance requirements to dodge a penalty. There are no check writing fees, and incredibly, they offer free domestic wire transfers. Traditional banks routinely charge $30 just to wire your own money to close on a house or make a major purchase. With this account, the actual cost of ownership is exactly $0. Feature number 4, the automated compounding machine. Every single day, your money earns interest, and on the first of the month, that cash is deposited directly into your balance. Immediately, that new higher balance begins earning interest on itself. You don't have to log in, you don't have to click a button, and you don't have to move funds. It is the purest form of passive income working in the background of your life. Feature number 5, liquidity and the elimination of cash drag. In the wealth-building game, speed is everything. Cash drag is what happens when your money is stuck in transit between accounts earning nothing and missing market opportunities. With Fidelity, you have access to same-day ACH transfers. You can push up to $100,000 out of the account or pull up to $250,000 in on a single business day entirely online. No sitting on hold with a customer service rep asking for permission to move your own money. So how do you actually deploy this? If you want to stop bleeding money and start optimizing, you need to adopt what I call the hub framework. You take your Fidelity CMA and you position it as the absolute center of your financial universe. You go to your HR department and you route your direct deposit straight into this account. You then link all of your credit cards, your rent or mortgage, and your utility bills to autopay from here. Because of the sweep mechanism, this creates the ultimate lazy money strategy. Think about the timeline of your money. If you get paid on the 1st of the month, but your massive credit card bill isn't auto-drafted until the 20th, that money usually sits in a Chase checking account, doing absolutely nothing for 20 days. In the hub framework, that cash is earning 3.26% every single day while it waits to pay your bills. Your money is quite literally never sleeping. This framework also makes it the single greatest place on earth to house your emergency fund. An emergency fund must do 3 things. It must be highly liquid so you can get to it instantly in a crisis. It must be perfectly safe. And it must earn enough interest to fight off the silent theft of inflation. Let's run the brutal math. If you have $20,000 sitting in an emergency fund at a traditional bank, earning 0.01%, you are generating a pathetic $2 a year. That same $20,000 sitting in the Fidelity CMA earns you over $650 a year. An emergency fund is supposed to protect you, but if it isn't earning yield, inflation is actively destroying it. Furthermore, using this account triggers a massive psychological identity shift. When you use a traditional bank, you are a saver. You are a consumer. But when you move your financial hub to Fidelity, you are operating inside an investment ecosystem. Your spending money, your emergency fund, your Roth IRA, and your brokerage account are all under one single login. You can move money from checking to an S&P 500 index fund instantly with zero friction. It transitions your mindset from someone who just pays bills to someone who allocates capital. But because we deal in reality here, and this isn't a paid advertisement, you need to know the catch. There are 4 specific friction points you will encounter if you make the switch. And I want to give you the exact sandwich technique to solve them. First, you cannot deposit physical cash. There are no Fidelity ATMs that accept cash deposits. If you are a bartender, a server, or someone who frequently deals in paper money, this is a roadblock. The solution is simple. You create a zombie account. You keep one absolutely free. No minimum checking account, open at a local credit union or a bank like Capital One. You use that local bank strictly as a funnel. You walk and deposit your physical cash and immediately transfer it online to your Fidelity hub. Problem solved. Second, Fidelity does not natively integrate with Zelle. If you rely heavily on Zelle to split rent or send money to family, you won't find it inside the Fidelity app. The workaround is effortless. Venmo, Cash App, and PayPal still link perfectly to your Fidelity debit card. You just use a different app to send money. Third, linking external accounts using Plaid is a manual process. Many modern financial apps use Plaid to instantly log into your bank by asking for your username and password. Fidelity actively blocks this instant connection to protect you. They view third-party screen scraping as a massive security vulnerability. So, to link an external app, you will have to manually type in your routing and account numbers and wait for 2 microdeposits to verify. It takes an extra 48 hours, but it is a feature, not a bug. It is Fidelity locking down your assets from hackers. Fourth, new accounts will face a temporary hold on large deposits. When you first open the CMA and transfer a massive sum of money over, Fidelity is going to hold those funds for a few business days. This frustrates a lot of people, but it is a standard anti-money laundering and fraud prevention protocol. Once your account establishes a brief history, those hold times vanish, and your transfers become lightning fast. The final verdict is clear. The legacy banking system relies entirely on your financial illiteracy and your unwillingness to experience 10 minutes of inconvenience. They are betting that you are too tired to change your direct deposit, so they can keep paying you nothing while lending your money out at a premium. The Fidelity Cash Management Account is the ultimate disruptor to that model. It acts as the perfect hub for your daily spending, your paycheck, and your emergency fund. You are getting superior yield, zero fees, global access to your cash, and the safety of government-backed assets. By moving your money, you are officially cutting off the bank's ability to exploit your loyalty. At FinDocs, our sole mission is to peel back the curtain on the financial industry, expose the systems designed to keep you broke, and hand you the exact mathematical blueprints you need to build real sustainable wealth. If this deep dive helped you finally see through the illusion of the traditional banking system, I need you to do one thing. Hit the hype button down below. That button is the single most powerful weapon we have to break the algorithm. It signals the system to push this video out to millions of other people who are currently being quietly robbed by their savings accounts. Let's force the algorithm to wake them up. Thank you for your time, your focus, and your discipline. Stay sharp, and I will see you in the next FinDocs Financial Blueprint.